Hey everyone, welcome back to Corporate Decoder. Today we have a filing that sounds pretty dry but has some serious earth-shattering news talking about a company that is literally digging for gold. And guess what? They're about to start. But there are some interesting characters involved too. We're diving into a Form 8K from Perpetua Resources Corp. This report details some big moves, including new investors and a significant step forward in their mining project. Let's break down what these filings really mean for investors and the company. This report is dated the 27th of October 2025, and it is all about what happened very recently. Perpetua Resources is a company focused on developing the Stibnite gold project, and this report is packed with updates about that. First off, they're letting us know they're still a growing company, which means they get to follow slightly simpler rules for now. But they're also looking ahead to when they'll have to follow all the big company rules, which usually means more expenses and more work for management. Now, for some big news, Perpetua has signed investor rights agreements with two major players, Agnico Eagle Mines Limited and JP Chase Funding Incorporated. These aren't just minor deals, they give these big companies certain rights. With Agnico, they get a say in future stock offerings, meaning they can choose to buy more shares to keep their ownership percentage steady. They also get access to project data and will even have a joint technical and exploration advisory committee for the Stibnite gold project. This shows Agnico is seriously invested and wants a voice in how things are run. This deal ends if Agnico's ownership drops below 1.5%. JP Morgan gets similar rights, including the ability to maintain its ownership percentage in future stock offerings and access to company information. Their agreement also terminates if their ownership falls below 1.5%. On top of that, there is a registration rights agreement with both Agnico and JP Morgan. This means Perpetua has agreed to register the resale of shares that these investors bought. Essentially, it makes it easier for these large investors to sell their shares down the line if they choose to. This is where we see the money changing hands. On the 27th of October, Perpetua entered into subscription agreements and sold shares and warrants to Agnico and JPM. They raised a massive $255 million US. That is a lot of cash. They sold over 10.9 million common shares at $23.3 per S-share. Agnico bought a larger chunk than JP Morgan. They also issued warrants. These are like options that give Agnico and JPM Morgan the right to buy more shares in the future at a set price. These warrants are set to expire over 1, 2, and 3 years with increasing exercise prices. This is a common way for companies to raise capital while giving investors potential upside. After this deal, if Agnico exercises all its warrants, it would own about 8.6% of the company. If JP Morgan exercises all of its warrants, it would own around 3.68%. This means these two new investors will have a significant stake, but Paulson, the largest shareholder, will still hold more. This is important for investors to note. These shares and warrants were sold in what is called a private placement. This means they weren't registered with the SEC for public sale. So these securities can't be easily bought or sold by the general public in the US without going through registration or another exemption. Now, this is the really exciting part. The Stibnite gold project is actually moving forward. In September, the US Forest Service gave the company a conditional notice to proceed, which is basically permission to start construction. This was after the company met all the requirements outlined in a previous decision document. The big condition was posting the necessary financial assurance, which they've now done. On the 21st of October, Perpetua announced they officially broke ground on early construction work for the Stibnite gold project. This is a massive milestone after years of planning and permitting. They've posted around $139 million in surety bonds and other financial assurances to cover potential reclamation costs. Imagine having to put down that much money just to prove you'll clean up after yourself. They are also working on securing a massive loan from the Export-Import Bank of the United States, or EXIM. They applied for up to $2 billion and have received a preliminary term sheet. This is a huge sum, and they're hoping for final board approval by spring 2026. Getting this funding is crucial for them to complete the project. With ground broken, they are also looking for ways to process antimony, which is a key element in their project. They've issued a request for proposals to assess potential processing facilities. They've also signed a contract for worker housing, a $131.7 million deal to build a 10-person camp. So they are really staffing up and getting ready for serious construction. There is a change in leadership too. Jessica Largent is stepping down as Chief Financial Officer, and Mark Murchison has been appointed to take over. Mr. Murchison has a solid background in finance within the metals and mining industry, which should be valuable as they move into this next phase. Now, it is not all smooth sailing. There are some legal challenges. The Nez Perces tribe has filed a lawsuit against the US Forest Service and other federal agencies, challenging the approvals for the Stibnite gold project. They're concerned about environmental impacts and violations of federal laws. Interestingly, there is also a general court order that has suspended these legal cases due to a federal government shutdown. However, even with these lawsuits and the shutdown, the project approvals remain in effect for now. Perpetua has also entered into agreements with the plaintiffs in these cases to put certain restrictions on construction until the 1st of February 2026 in exchange for them not seeking injunctions. Let's talk about the risks. They are very upfront about the fact that they don't yet have enough money or secured financing to complete the project. This is a pretty big deal when you are talking about a project that costs billions. Here is a look at ownership after this new investment. Paulson, their largest shareholder, will hold about 27.3%. Agnico will have 6.5% and JP Morgan will have 2.7%. While Paulson's influence remains, the new investors add significant weight. This is a stark warning. They admit they don't have the money yet. The total estimated initial capital cost is around $2.2 billion. They are heavily reliant on that EXIM loan and other potential funding sources. If they can't secure it, it could halt the project. Getting all the necessary permits is also a huge hurdle. While they have permits to start construction, they'll need more for full operation. And remember those lawsuits we talked about. Those can cause delays and make obtaining future permits much harder. This is where that big financial assurance comes in. Companies are required to post bonds or other financial guarantees to cover the cost of cleaning up the mine site after they're done. This is to protect the environment. They've already posted a huge amount for construction, and they'll need even more for when operations begin. This is a critical point. Perpetua has never actually run a mine before. Developing a mine from scratch is incredibly risky. Few exploration projects ever become producing mines. They have to navigate construction, processing, approvals, and market prices. There is absolutely no guarantee they'll be successful or profitable. Building a mine is like building a small city, but with a lot more geological surprises. They list a ton of risks here, like unexpected ground conditions, labor shortages, cost overruns, and even natural disasters. Any of these could derail the project or send costs through the roof. We already touched on the lawsuits, but this section reinforces that ongoing legal battles are a major concern. These challenges can lead to higher defense costs, delays, and even the loss or modification of permits, which could be devastating. Like any company, they are reliant on their key people. Losing their CEO or CFO, for instance, could seriously impact their ability to push this massive project forward. They also need to hire a lot more people, and finding skilled workers in remote mining locations can be tough. And in a twist of fate, the current government shutdown is causing problems. It is delaying approvals, slowing down access to government data, and could even mess with the EXIM loan process. This also affects the courts, which are already dealing with those lawsuits. They are currently considered an emerging growth company and a smaller reporting company. This means they have fewer reporting requirements, which saves them money and effort. However, they expect to lose this status soon, meaning more paperwork and higher compliance costs in the coming years. So, what is the story here? Perpetua Resources is at a critical juncture. They've secured significant new investment from major players like Agnico and JP Morgan. They've finally started construction on their Stibnite gold project. This is a huge step forward, moving from planning to actual development. The money from these new investors, totaling $255 million, is a good start. But it is clear that's just a fraction of what they need to complete this multi-billion-dollar project. The biggest elephant in the room, and it is explicitly stated, is that they do not have committed financing for the full cost of the project. They are pinning a lot of hopes on that $2 billion EXIM loan, but it is still not a done deal and is subject to many conditions. The risks are monumental. They are a company with no prior mining history, facing massive capital requirements, potential environmental and regulatory hurdles, and ongoing legal challenges from indigenous groups and environmental organizations. Despite the risks, they have managed to get to the breaking ground stage, which is a significant de-risking event and a testament to their progress on the permitting front. The involvement of established companies like Agnico and JP Morgan provides a degree of validation and potential strategic support. However, investors need to understand that this is still a highly speculative venture. The success hinges on securing the remaining financing, navigating complex legal and regulatory landscapes, and successfully executing a massive construction project. It is a high-stakes game with potentially very high rewards if they pull it off, but the possibility of failure is also very real. Alright, that is our breakdown of Perpetua Resources' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can pull off this massive project? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more discussions and community insights. Thanks for watching. See you next time.